and welcome to another episode of Straight from the Fund Manager. Joining us today is Vivek Sharma, Fund Manager of Nippon India Ultra Short Duration Fund. Hi, Vivek. Thanks for joining in. Vivek, to begin with, what is an ultra short duration fund?
Ultra, again, as defined by SEBI in its categorization of schemes, is a fund which invests in shorter maturity securities. There is no restriction on the kind of assets to be invested, but the portfolio duration is restricted to 180 days and is suited more for investors looking to invest for 1 to 3 months or up to 6 months of surplus money.
Right. Vivek, what is the suitable time horizon for investing in this fund?
Yeah, like I said, the fund has a restriction on the duration bit on 180 days. So fund is largely suitable for investors looking to, invest their surplus money for 1 to 6 months.
On that point, Vivek, if the duration is short, how do you aim to generate a higher yield for the fund while still managing the interest rate risk?
So given the nature of the product, it operates on the shorter end, and hence the focus of our management is largely on the accrual part. We do not take any, undue interest rate risk in this portfolio. Focus is to maintain higher carry in the portfolio and generate a differential return by running a higher carry by investing in assets available in that bucket.
Vivek, also given the importance and the nature of this fund and the importance of liquidity in an ultra short duration fund, what strategies do you undertake to ensure the availability of cash for redemptions?
So one fund always has exposure to sovereign assets to a tune of 10 to 20% in the portfolio, which can be liquidated in case of need of cash in the portfolio. Second, since the portfolio maturity itself is very short, we construct the portfolio in a laddered manner where assets are maturing on a weekly or a fortnightly basis, giving natural liquidity to the portfolio. Thirdly, a large part of portfolio is invested in high grade securities, which can be liquidated immediately in case of cash requirement without impacting funds performance.
Right. Vivek, does this fund take any credit risk?
Yeah, so like I said, the fund focuses largely on the accrual strategy, and hence we do invest in assets which are rated below AAA. We have investments in assets rated AA and AA plus in this portfolio to the tune of 20 to 30%. Idea is to run a shorter duration investment into these products to uh, increase the carry of the portfolio. But again, we do have a very strict investment philosophy. So I would not say it's a credit risk. We do invest in credit assets in this portfolio without taking any undue risk, which are thoroughly due diligence is done on those assets by our research team, and we are very cognizant of the fact that when we are investing in any non AAA asset, we are comfortable on that credit.
And Vivek, given the nature and the attributes of an ultra short term fund, how does this compare with old school traditional investments?
One very important feature of any ultra short duration product with a vis-a-vis any traditional instrument is the liquidity which is available in these portfolios. So an investor can redeem his money on a day's notice without attracting any penal interest. Mutual fund investment gives investor a better tax efficiency, as your tax is only due once you redeem the money from the portfolio and not on accrual.
Right. Thank you very much, Vivek. Thank you for breaking it down for us and telling our viewers everything they need to know about the Nippon India Ultra Short Duration Fund. Thank you.
Thank you so much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.